All right, that quick little pullback on Ford. There we go. All right, that was me closing the put leg on that Ford position. And that was that condor that I opened yesterday. Yep, the condor. And then the strangle will work with a little bit too here. So what we're going to see is if we start to trend, we can run one leg of the strangle. And I'll show you how to do that. So if you're long a call and a put, you're looking for a breach. And if you compare to yesterday's price action, right around the time you got into that was, let's see here, about 10:30. So you should be net positive on that thing by now. So if you look at your position, I forgot what your entry was. Sure. And if we crack through $13 of support, we can really start to roll this really quickly out of those two short legs on the condor, and then also we could go and take advantage of the strangle as well, where we can, if we breach that $13 and we start heading to $12.50, close the call, of course, and ride the put on momentum. But you want to make sure that momentum's going to be there for you. Okay. For total cost for the strangle? You went to the 30th expiration, if I'm not mistaken. Okay. So at this point, you are looking to see if we get either a range or a trend here. So if you get a trend, you sacrifice the losing side and ride the winning side for profit. If you get a range, you can leg out of it for profit. And worst case scenario, if it just kind of settles along, this $13 to $13.25 range, in this opening time, you could probably close that whole position for a little profit. I'll have to see if you can get a screenshot on that position, because I didn't match that position. if you wouldn't mind. Oh, no problem. Let's say a quick way to do that, if you're on a Windows-based machine, hold that Windows key, hit Shift and S, and then use your mouse to highlight just a specific area of that screen, and you can share screenshots really rapidly that way. Ah, gotcha. If it's not too much trouble, I don't want to put you to a whole bunch of tech school to go through. All right, I've lost track of my total position because I also have a couple of other positions open in that Ford equity. But I did get the put purchased for 8 cents, had sold it for 12 cents, and now I'm looking for the other side of this to buy back the short call. I just got to find the darn thing. There it is. All right, looks like SPY, we're rejecting that resistance area, so we're starting to look like we'll come down. We're going to develop a range probably in about the first 15-20 minutes of the market time. And the idea is when you're in that kind of range, you can simply take some trades just like we would with the strangle, but you can leg into it, and you can use the range to leverage that strangle with a little bit of a net positive position between the two legs. And we're morning. I was saying I already took and closed that short put on that condor right up in here when it rejected, and I opened it for 12 cents. Right, each one individually, because the net position will probably not be profitable at this point, but we're going to essentially use the short legs to swing trade in order to lower the cost basis on our long legs. And I already bought back that put, or back the put right in this range, and I'm looking to whoops, I missed the opportunity to buy back the call at the bottom, but I'll get it. But essentially, we're looking to buy back the short legs for less than we sold them for. But in a case of if it runs through the calls all of a sudden, we're still in a debit spread position, so we'll still have a potential profit of the net between the two legs of the debit spread on the call side. So in this case, you'd want to buy back the put, and you want to see this range essentially continue to swing up and down here. Right, yeah, don't sell your long put, but buy back the short put. And you want to let this shake out just a little bit longer maybe. Well, that's the thing. The short put, you sold it for a credit, and the idea is you can buy it back to close it for less than you sold it for. So then you pocket the profit on that, and that profit offsets the cost basis on your long put. And SPY is working out a nice range in there as well. This can... So your short put was $6 up and your long put was $6 down right now? Ah, okay. Gotcha. So you've made a $3 profit on the short put so far. No, so you would want to buy back the short put when it's appropriate. So we're going to look for a reversal on the bullish trend, part of the range here. And when we see that reversal, we can buy back the short put for less than we sold it for, thus netting a profit. And then when this range returns to the support area, we can go and do the same for the short call. Because we have plenty of time. We have expiration out to next Friday. Eventually, you want to make sure it's going to be profitable first. So right now it won't be. You can, but give this range a little bit more time. I bought mine back a little too early, so. But we've got a range possible all the way to about 1350 from this. Just basically a bunch of people trying to catch the bounce on this thing. So we want to watch momentum on that. So essentially my long call right now is worth 42 cents and the short call is worth 23 cents. So I'm still net profit on that. And I'll probably keep that open until I see a reversal. The idea is you can close the whole side of one spread. You can go and leg out of the short puts, whichever works best. So if you're holding a long put, you would want to sell to close, and that's the difference in the lingo. So sell to close would be STO, And if you're looking at buy to close, it would be BTC. And then the yep, no problem. There's a little lingo involved. And then the opposite, if you're looking at your brokerage, it'll abbreviate it in BTC, BTO, or STC, STO. Right. Which is respectable. And like I said, just wait for this to start trading in a range. And ideally, you want to see it probably find a reversal on this bullish part of the trend that's opened right now. And anywhere from like 1340 to 1350 is possible bull target. So we'll let that shake out, and when we see the reversal, you can go and buy back that short put. And then the idea is if the range returns to support, you can then go and buy back the short call. And then suddenly you're in a net profit position. And you can do it over and over and over again all the way up to about Wednesday next week. So this is kind of a version of the of a wheel trade with a strangle in the middle. The idea is to keep the strangle open as long as you can without ever losing anything, and use the short legs to offset the cost in the long legs. So it's almost like a buy right strategy, but in both directions. Mm-hmm. Right, in that scenario, yes. And the idea is if you do this right, your cost basis will be free or negative by the end of the week, typically, if it stays in a range. So your net position will be profitable. And then you can also close the whole thing down for a profit. But if you leg out of it, you have a much higher probability of generating income from this position while you have it open on the long side. Right. So like if you were just riding a strangle, you would have probably sold the put right around the bottom of this, and you'd be riding the call all the way up to the bull target, or until you see a reversal. Gotcha. The strangles are the first part to figure out, and it's probably the easier trade to take, of course. The condor is a little different scenario, but it works the same, just a little bit more efficiently. Mm-hmm. Right. Correct. And as long as you are net profit between the two, as long as the loss is not bigger than the gain, then you can go and sacrifice the losing leg and then ride the winning leg on momentum until the momentum runs out and take your profit. Correct, but you want to make sure that your position is net profitable when you do. Gotcha. The idea is to generate profit in either direction and take advantage of the momentum in the break. So entering a neutral position like this, you would only do if you had a pretty good idea that the market is going to move in a dramatic direction, but you're not sure exactly which direction. So like Ford entering that position yesterday, we were looking at the potential for this to either continue to trend down, which it did all the way into the close, even below the first opening low. And if you opened your strangle here, your put would be still very profitable at this point. And let me go back to a 5 minute so I can set a pivot where we're at. We're getting kind of close to that point where you opened it though. So ideally you would have sold the put for profit here on this reversal on the opening, and then you'd be riding the call up until you hit resistance or until it starts to look like you're going to get a reversal. And the idea is you take advantage of all of this downward movement, and then if the call was not quite profitable when you opened this morning, you would essentially have taken the profit on the put side and ride the call side back towards what you paid to enter it. So you would take less of a loss on the losing leg from yesterday by rolling it through today. Gotcha. No problem. You can go that route, or you can click on your position. And clicking on your position is probably the best way to do it, because then you open that position and you can decide whether you want to buy more or sell it. So it would be a C and a P. I'm not too familiar with Tastyworks, so I'm not 100% sure. Okay. Correct. Right. And if you see a reversal of this little bullish trend that we're developing here, which, like I said, would probably be up to somewhere around between 1340 and 1350 will be about where we'd like to see a reversal. And then you would ride the put back down in this case. Correct, because you're already long a call, you'd be selling it to close, yes. Correct. No problem. This will take several times, and I always say I've got 4 children worth of patience, so I'm happy to go over it again and again and again until we get it right. That's why we're here. So welcome. In any case, thank you for being here. Yep. Watch this 1-minute chart really carefully, because this is where we're likely to see a breach of that 8 period to reverse this little bullish trend. And looking at SPY, we're kind of setting up to maybe set one last push up to about 387, possibly. But if this closes a doji here, the next candle we see could be bearish down to the 8 period. And ideally, when we see a reversal, we want to see a crossing of the 8 period with price. So like here we had this little push up on top of the 8 period. Saw a nice wick out of the upper band here. And then we saw this bar straight through the 8 period, as well as a 20 period in this case, right to the 200 period. Very clean. That was nice range. And now this will decide whether we're going to trend a little higher or if it's going to reverse here. Looking at the 5-minute chart, though, we do have a bullish engulfing candle here currently. Correct. So now we're if you're in the condor, this is where you would like to have sold that put. I sold mine early, but this is where you'd like to have sold that put, and then you essentially want to wait until price hits either a support zone and starts to form a bullish reversal, or if the price starts to trend, and then you could take this. Right, exactly. It's going to be a practice situation first. So the idea is you want to profit from the short legs if you're in the condor. And if you are in a strangle, you want to profit from the long legs, of course, because that's all you've got. So the idea of how to profit on a short leg is to buy it back for less than you sold it to open. So for you, being in a strangle, both the legs are long. On a condor, you have 2 long legs and 2 short legs in both directions. So when you sell an option to open, you are short that option. It kind of gets confusing because you can buy and short a stock equity, and it's just, if you're bearish, you short it, and if you're bullish, you buy it, you go long. So in options, the direction of the contracts is going to establish whether you're bullish or bearish. So if you buy to open, you are long, whether it's a call or a put. And if you sell to open, you are short, whether it's a call or a put. Doesn't matter. So you've got to understand the difference on knowing which legs are short and which legs are long. Correct. No problem. Stone will be with us shortly. He apparently spilled some coffee on his mouse. He's asking, is it Monday? That feels like a Monday, doesn't it? Let's see, were you going to hold that Netflix position through the Fed meeting and rate? I wasn't planning to, but I will if I have to. If I've got any profit above 20% before today gets to be establishing a trend, I would probably just take that profit and get ready to roll that position. So let me check on that position in just a moment, and then I will get back to you. Correct. And ideally, you want to make sure that this... Right, so if you're in a strangle, at this point, you would want to have taken profit on your call. And if this turns into a pennant and continues to go bullish, you definitely want to get rid of that put. But if this were ideal and it started to roll through the 20 period here and remain bearish, at least down to support, you would take profit on that call or take a lesser loss on that call and ride the put down so you can gain some profit from it. What parts, do you have both legs open right now? Okay, so ideally you would look for this to continue through that 20 period, and you'd want to get rid of the call, even if it is a slight loss, and then take the profit on the put at the bottom. So you want to see this trend back down to support, which our opening support was about $3 or $13.17, somewhere in that neighborhood. Right. Okay. And then your put should still be profitable. And ideally, you want to ride this momentum back to support. You want to make sure it's going to. So you're going to watch that. You want to ride the price action down so your put remains profitable. And the idea is that your put will be more profitable than the amount of loss you took on the call. Yeah, what was the contract strike? Ah, okay. There it is. Okay, so you have... Oh, you went with a straddle. Okay, so you went with a 1350 call and a 1350 put. That's a little different than what we're doing. We're doing strangles. We want to be just at the money. This is okay though. You're still going to be net profitable on this position. Let me see here. Okay, and then you want to make sure that this is going to remain bearish. So you want to watch this trend on this 8 period here. If you start to get bullish momentum back above that 8 period, take the profit on your put. That white one. The top one is the upper Bollinger Band. This is the 8 period right here. Right, because if this becomes a little reversal where it starts to go against your put, that put value will decline as the price goes up. Correct. No problem. So I'm trying to trying to walk through both strategies because, like I said, I have a mixed group of people here. So ideally, if you're brand new to options, you'd want to keep these as strangles, and they're just much simpler to trade. Although they're not quite as efficient as a condor would be, they still are profitable. So the idea is you open this position when you are sure that you're going to get either a big range or you're going to get a big move and you're not sure of what the direction is, and nor do you have to care what the direction is because you're neutral. So when you go to open them, it's actually ideal also to leg into them. So like if you had the opportunity to open one at the opening swing here this morning, you would want to probably buy the put right at the top of this green candle when it started to reverse down, and then buy the call when price was down here, so that your position total would be net positive. You'd have a little bit of profit from this decline here between the two legs. So later on, if you were day trading them, you would want to take profit on that long call here and then wait for this to start to trend down and find the bottom where it starts to show a reversal, where that trend starts to pull back and get above that 8 period. You'd want to close the put, and you would have a slight loss on it in this case if you opened it this morning, but the profit you made on that call would be more than overwhelming it. And if you close it at the right moment, you'll reduce that loss on that put. And if, by chance price resumes a downward trend and breaks that support level, you'll have a much bigger profit on the whole position, having closed the call here. Ride the momentum on the put till it's out of momentum. If you opened this yesterday, the idea is I was looking at reopening that position right around here, and then towards the end of the day I ended up opening a condor altogether. So I'm legging out on this momentum here on this this range, and I'm legging out of the short positions. So here I'm looking at this bar close on the 1 minute chart. If that closes above the 8 period and the next candle starts to open above it, then I know that this is likely to either pull back on our bearish trend here, or this can reverse here and continue to ride bullish. Yep. Correct. Yeah. Pardon me. So overall, you should have a net profit in that position. Right. No problem. And the idea is I'm trying to emphasize teaching these strangles. Pardon me, my throat's a little dry. I'm emphasizing teaching these strangles because it's a position for beginners to be able to have a higher probability of taking a profit from it and have a lower probability of losing from it. And it's so much better. It's a little more complex than trading just directional options, but the idea is that you're taking a whole lot of risk off the table. Because, I mean, let's say you got into a put right when the price was breaking support here and threatening to be bearish, and then this started ripping your face off. Having the experience to close and cut that loss very quickly is a bit of a challenge for a newer trader. But if you're in a neutral position, you don't have to worry so much. You can sit here and ride the winning side. At this point, you could sacrifice the losing side and ride the winning side. Pardon me. Or, yeah, sorry about that. Sure. Yeah. Oh no. Yeah, we'll stick to strangles and look to overnight then. Sorry about that. That's Yeah. Right. At least you had that day trade to be able to take control of that situation before it got bad. Gotcha. And you can definitely. And I'm looking at this. We had that nice bar right through the 8 period, but it wasn't a full on reversal, so we could see a little bit of a range down to support again. So we might get some continuation out of this a little bit. Then again, it can sit here and accumulate and go back to bullish again. So we're going to watch this 1 minute chart and make sure this doesn't turn into a measured move on us. In the meantime, SPY's kind of threatening to do that, just that. We had this nice bullish run, we had this pullback, so if this starts to accumulate and break out bullish, then we can shoot for that 387 and maybe an extension up to 387.50. So keep eyes on that. I'm just realizing that my desktop audio is not going out to YouTube, so all the background conversation that's been going on, the two-way conversation, is kind of null on that end. I'll fix that as soon as I can here. That was... Oh, hey, it's Stone. We can hear you. It's a little low, but I can hear you. Oh, no. Okay. Ah. Did you spill water in your laptop? Okay, at least that. Gotcha. For the moment, and it's threatening that it could make a measured move, but it's kind of it's one of those days where we're expecting a range. And tomorrow's the news breaking day, so that's when we can see some explosive movement. But if there's any chatter at all at what it's likely to happen with the interest rate tomorrow, then that can definitely move the market. So expect. Did we? Oh yeah, it didn't. That's interesting because I didn't see that on my calendar. Okay. Ah, yes, that's the day where things are really going to move. I gotta look in on my Netflix position. Standby. That's Victoria. Yeah, it says it's Hulse Victoria, so Hulse Victoria. There she is. Ah, gotcha. Yeah, I need to fix my desktop volume. For some reason, it's not going out to YouTube. I don't know what's going on there. A little bit, but we'll get over it. I'm running Discord okay. It's not seeming to be weird. So I'm trying to get to see, I'm not getting desktop audio. What's going on here? That is really, really weird. Well, I'll get that sorted out later. I've got other things, other fish to fry, so to speak. All right. Doing the fish fry. Let me get... oh, man. Let me get that Netflix position open. I'm trying to peek in on it. Oh, wow. It's amazing how that old stuff holds up, man. I mean, you can, have it as a backup for years and years and years and never use it. And get collected with dust and all sorts of crap, and you can still use it. Good morning. Yeah, I bet it will. Nice. So I'm trying to figure out... Right. Let me go and reply. Nice profits. That was good. Let me go and reply to this other message I got about the Netflix position. I was trying to get an alert out yesterday, and worked out it was profitable for a while. I didn't get my Netflix position closed yesterday, and I probably should have. I was a little focused on that massive return on Ford. I was not too concerned with my Netflix position, but now it's actually down a little bit. So I'm going to see if we can catch a bounce on that, and I'll close it for either break even or a small profit. Or if I've got really no choice but to hold it through FOMC, I might just turn that into a condor. I might open up an out of the money put debit spread on that to cap that position, at least through the FOMC, and then we'll see if we can get that breakout to continue above that 240 resistance level and maintain some bullish momentum here in the long run. So I'm sitting tight with that, and I might just take and I'm going to start looking into what the put debit spread leg of that would look like real quick. There's Ford. We're kind of looking like we might set up an M-top here. That'd be cool. And M-top is great because usually they tend to decline bearishly rapidly. So we'll watch this resistance zone. In fact, I'm going to draw a line on that real quick. Yes, it is right there. And it's funny how price went right up to that sucker this morning. And if it gets to a nice M-top here, we could have a quick breakdown. But if it pushes through it, then this sets up a measured move, and we can run bullish to like 1358. That's not as likely, though. Ford's definitely got some headwinds in the company. All right, let me see if I can peek at what we're looking at for Netflix to see if I can cap the tail end of that with a put debit spread and essentially prevent any loss on this position further than the 15% that we're locking in right now. Man, my throat is just really dry this morning, and I can't do anything to help it. I might go sip some lemon juice or something with a little honey in it. Hey, I just had an option order execute. What was it? I'll look at it in a minute. Yeah, let's see here. Yeah, you better get that mind right, buddy. No, sir. All right, so in the event that I might end up capping that Netflix position into a condor, I like to get into the buying the 200 put and selling the 195 put. And the idea is I don't want to spend any more than I spent to enter the long position on the call debit spread. So to lock that in, I'd like to see that hit about 44 cents, and I bet if it bounces here, we'll get that. That gives me a nice wide out of the money strangle on the situation with a condor instead of a strangle. And it just makes it so I can kind of hedge my long position. All right, Ford coming back to that pivot again. Let's see what happens here. Next couple candles will tell us a story. Oh boy. Yeah, you can go crank the speed in your settings, but I don't know if it helps much. Oh. No bueno. All right. Okay, that one's down, that one's up. So I'm net positive on my call debit spread on Ford still by about $4. So I'm waiting to see what happens here at resistance. And remember, I did close my short put position on that little spike out of the upper band right at the open there. Yeah. It's got that feeling. I'm hoping for the M-top so I can go and rocket my long put position and then close my short call. And then go and open the short put back up at the bottom there. But man, this is threatening to run on me. Yeah. it's rough because this is historically a bearish month. We got basically this is the last week of the really nasty news that we're expecting. But we don't have a direction. I mean, you look left on SPY, it doesn't really give you a direction. It just gives you consolidation and a range, and it's like it's waiting for the other shoe to drop. Now, long term, we're looking at a very strong possibility of closing back down into this gap again, which could settle us at about 377. Or we've got the upper range of this control bar here, where we could close at about 392 again. And that's I painted that line yellow because that's been a critical tipping point in this whole mess. That's been the mean. So definitely going to have some interesting times today and tomorrow. I think we're going to get a decision on direction. And although we opened the week with a pretty nice setup for momentum to take us through a couple of trend days. We closed Friday and then we opened Monday and Tuesday with some range to trade at least. But it was just part of a big double bottom. And that came up, hit that target 1 area. You look at the control bars right here. Nailed it right in the after hours. But then it rejected it, came back down, and opened yesterday with that bearish momentum all the way down to the bottom of this whole support range. So we got this range in here. We've got a chance of coming out of this, and this looks more like a bear flag than a bullish reversal of any kind. Some people would see this as the head and shoulders pattern or the triple bottom, but that doesn't qualify until it breaks critical resistance, and that's going to be about 388 in this case. So let me put right. Let me put a different color line there. Let's go with blue. Now here's, why won't that go away? Oh geez. My Weeble is starting to do weird things now. Sure, now I need that menu to go away. There we go. Now I need that to go away. Whatever. Blue enough. So, if this is a triple bottom reversal, we would see what we like to see for a wolf wave. We got low 1, high 1, low 2, high 2, right? So let's start drawing some lines here. We've got oh man, my drawing tool is being weird today. This is just not right. Fine, I'll stop here. Zoom out. There we go. Now I get that little 1/4 inch to move my line. All right. Sorry for the difficulty today. This is one of those days. Let's make that our new purple wolf, only this one's bullish. And then we'll make it a little thicker there so we can see it. So there is your bullish wolf target. I mean, that's way above that 392 area. We're looking at 398 possible. So if the market makes an explosive move on this news to the bull side, that's a valid target. And if it fails at that critical resistance point, then this just turns into a bear flag. So you can kind of get the scale of what to expect on the bear flag just by looking left. There's a measured move right here. So let's look at about an estimate of about that height. So what, 398 to like 380. So that's an $18 move. Holy smokes. So if that becomes a bearish measured move setup after the bear flag breaks, that bottom goes a little bit beyond our angular support here. Let's zoom out to that 2 hour again. There it is. So yeah, about 388 would be the resistance and 370 would be the support on that. But into tomorrow, Yeah, I think I'm gonna do. I'll do a video later on today, just looking at SPY. We're gonna break that down a little bit better tomorrow, or later on today, because later on today we're gonna have some clues as to what we see in today's price action to let us know where we're expected to run. All right, where am I? Ah, yes. Thank you. Just making sure that I got all the ducks in a row here. Got a little pennant here on Ford. We could have a little bit higher reach on that right arm on that M top, but check out this little angular line here. I wish the menus would appear where they're supposed to. Things are getting weird on my Weeble. I might have to reboot. Here comes another push. No kidding, that's a pennant break. Fortunately, I still got that debit spread open on the call side, so like I said, I could close that position for a net profit if I need to. And that's the great thing about the Condor. It's like if you got out of the short put side early, I'm still net positive on this. SPY's making a push too there. All right, I'm going to take a quick little break and get a drink of water and maybe a little lemon and honey. I'll be right back, guys. That's better. All right. See if my vocal cords will function somewhat this morning. It's still scratchy, but better. Then I'll have to figure out why my desktop audio is null. It's like nothing. Cannot get it to work. It's like a total dead stick. All right. What do we miss? We got a bunch of little dojis here on Ford. Let's see where those go. One push. Wow, look at that. There's your Netflix double bottom. All right. There's 387 smoking. It could easily. And that's the thing. Like if the market leads up to an unexpected, bullish move, hits a clean pivot, probably like 392, just before the meeting, and then rockets down during the meeting. That's when I want to have my 10-second chart open on the futures, because I mean, if it's anything like Jackson Hole, dude, you can really clean up on that stuff. This was Jackson Hole over here. And if you remember me talking about it a few weeks ago, just before Jackson Hole, we were getting really into that little diamond pattern on the 5-minute chart. Set up our levels just beautifully on that drop. It even nailed the pullback zone. So it was really easy to make some killer trades on that. And that was probably the best futures trading week of my life. In fact, probably my best trading week altogether. I'll have to compare it to a couple of my really massive options killings and see if that tops it or not. I haven't looked yet. Many numbers floating around in my head. Yeah, look at that pullback candle on the 1-minute chart. Bam. Just went way out of range and fell. All right. Right. Not here. And right. And we knew 1350 was another resistance point on Ford too, so we had that early on in the get-go. So hopefully, Victoria, your net position that you closed, some profit out of that, and then we can walk through it again. She instead of having a strangle open, actually had a straddle open, which is a different strategy. Still useful if you leg into it correctly. A little difficult with some brokers because they don't like you doing that exactly the way she did. But when you open both a call and a put at the same strike, it's a little bit difficult to deal with, because then your delta is high, and initially you need a really big move to make one more profitable than the other, so you can close a net profit on that. But being able to wiggle out of it is okay. Just ideally, you want to be one strike out of the money or at the money on Ford when you're entering these strangles. And even more ideally is you want to enter them one leg at a time instead of jumping in the whole position. There is a time when it becomes appropriate to jump in the whole position. Like yesterday, I went and opened that condor right in the midst of this tip over back here. Where was that? I want to say it was about, when did I post that picture? Let me go back in the Discord. I can look. There it is. About 2:30 we opened that. Ford's kind of making retracement moves here. Let's see. could go for a 50% retracement control bar at about 1359. Let's throw a pivot down there. That's in that control area right there. And all you do is look left for the control bar right here. That guy. And we did kind of get that measured move already underway there. If you remember right, we were looking at this is the trend, this is the pullback, that's the finishing trend. And all we do is, well, ordinarily Stone would take and make a shadow box on this, but 1317 base. I'm going to actually call that about a 30-cent measured move from the base. So yeah, we're approaching that. We got close, 1354. Clean measured move, but we would expect if this respects what a measured move will typically do, we can get that 50% retracement, so we can look for a push back down to about 1337. So not bad, and that's the whole point. Like you had a fairly sizable outlay in that position, and you only lost $11. That's what makes learning how to trade these strangles ideal compared to trading direction. That's pretty good. I think we will. We got to figure out what the range is going to be before we can set up another strangle if you're exited today. And that's kind of where that condor that I opened yesterday starts to shine, even though I made the mistake of closing the short put too early. I'm still in a net positive position because the debit spread on the call side is still very, very profitable. And then the next one, I'll help you set up the legs on that a little more cleanly so we can get the better experience on that. No problem. All right, nice bearish engulfing on SPY. Thanks, man. I aim to please. And the idea is, it's a lot of people would go and try to teach options trading in a directional standard, and I like teaching with strangles better because you can mitigate so much more potential of loss in a strangle than you can with just a directional option. And it's like if you get that deer in the headlights type of thing where you don't close your loss fast enough, the strangle is going to be really beneficial to help you learn that and also to help you to manage that as a way that it's not fail proof because you can lose on a whole strangle, but the amount of loss is usually much lower than you would on a directional option, especially if you start playing with SPY. And that's what. No, it's been rough, man. Dude, Netflix. Right, you do have to have level 3 for the Condor, but for the general strangle, you can do that with a level 1 options account. Right. You just leg in and leg out. You don't have to open it as a whole position. In fact, it's ideal that you don't. You'd rather leg in with some profit between the two. Alright, I'm sorry that those out there on YouTube cannot hear the other side of this conversation, but we're talking back and forth about the pros and cons of trading strangles versus trading just directional options. It's just one of many things we do here is we take the hands-on approach. We'll walk you through it. We'll show you how to manage these positions, as well as how to understand how the positions work, and to develop that experience in trading them. So we try to make the difference, so to speak. Yeah, I'm thinking there's a little bear flag happening here on Netflix, but keep an eye on that 15-minute 200 period. It could bounce off that. If it doesn't, then wowzer. This is going to be a little bit bonkers going into this FOMC thing. What time is that? 2 o'clock? I think instead of doing the look at SPY thing where we break down SPY generally, we'll just do it as a live stream later on today and see if we can get back into it. That'd be kind of cool. Oh man, it just keeps on going. 1359 is the top of that control bar, so be aware. I showed you guys that. I'll show it to you again. A 15-minute chart, we're looking at the top of this 10 o'clock candle right here from yesterday's bearishness. That was just a little rebound, essentially. And we are sure. Okay, I'll hold the charts. All right, market, don't move. Wait for Stone. Oh boy. Well, descending wedge or bear flag? Let's decide what to happen on Netflix here. And I think we're hitting support on this range, this upper side of the range, or upper stride, if you would. And we're looking like we could consolidate in that range a couple legs. If not, we can certainly flip the book on that in a big hurry. Let's see here. Why is that not working? There we go. Okay. I just realized I don't have my noise canceling set up on my headset. Sorry about the background noise. Hey, we're smoking support. Cool. We might not accumulate in this range. Let's keep an eye on that 1-minute chart. And we got some widening Bollinger Bands too, so we're accepting a move here. Eyes on that 200 period for support there as well. There it is. Let that close a bearish engulfing candle on forward here so we can get back into the bearish side of this trend. But boy, that move yesterday on forward was awesome. Going into the day before, I was adjusting the legs on my strangle that I had long set up from last week. So was able to leg profit out of that, and then the day before that big bearish move, I was a little off balance. I had twice as many puts as I had calls, and I was literally looking at that momentum yesterday going to the bearish trend on a 30-second chart with forward, watching for exactly the precise moment to take my profit on the entire position. So right on the open, I immediately just got rid of the call side of that and rode the put side down. Overall profit on that whole trade, 580%, which is astounding. And a little bit of that was dumb luck. I was expecting the day before to have enough trading range to where I could leg into the put side and then the call side, and it just didn't work out to where I could add to the call side by the end of the day. So I was like, well, chances are I can fix that in the morning. And then after hours, as soon as the bell rang, they broke that news about their supply chain issues, and it was just nothing but a bloodbath into the after hours. I'm like, well, guess that's kind of dumb luck to have all those puts open instead of calls. And the off balance was definitely in my favor at that point. And then, opened up at 9:30. I was away with my wife at hospital, and was just in awe. And fortunately, that trend was taking some momentum, and at the point where I could no longer be in the room with her, they wheeled her back to have a procedure done. I was able to just monitor that trade and took profit at exactly the right moment just before that bounce. And man, that was awesome. I could not have asked for a better trading day. All right, so I just said I was off balance. I had twice as many puts open the day before than I did calls, and I was expecting to use some price action to add to that position or double that position on the trading range. I was expecting to add some puts and then add some calls before the end of the day, and it just didn't work out to be able to add the calls. So I went into it like thinking, okay, well, I can adjust the call side of that. I don't like being off balance overnight like that, but I can adjust the call side of that later. Or I can lock in or whatever. There's many ways to adjust that. I can turn it into a condor at that point. Many, many, many ways to option that. But it was just ideal and a bit of dumb luck that I had off balanced into twice as many puts as I had calls. So that was just mainly dumb luck. But I mean, it was definitely more than 10 on each side there, just to give you an idea. Still, man, that's tremendous. Good deal. So we got right. Surprise! Got a little bull bar attacking the 8 period on the SPY here. Let's see what happens there. I want to see that close an inverted hammer. That'd be glorious, because then we'll probably open up the next bar just below that 200 period and confirm a breakover. We wicked to 1358, and that was it. That's right where that control pivot is. I love that. Oh man, waiting. Give us a big old bearish engulfing smoking candle right through that 8 period. That would be awesome. I would greatly appreciate that. We did close a nice inverted hammer on SPY there, so watch this next 1 minute bar. If it smokes that 1 minute 200 period, we could get the breakover we're looking for. And then we just start looking at range for control. Kind of a boring day for trading SPY, realistically, because it's going to be kind of grindy and slow moving right up to the meeting here. But man, when that meeting kicks off, I think we're going to have some serious volatility. And let me see here. We've got. You could. Oh, dog hair. Something tickled my arm. My dog is shedding, and he doesn't shed a lot, but when he does, he rubs it all over things. Oh, I know huskies. Huskies and German shepherds, man, those things, they'll shed a whole carpet each. Yeah. Man, I'm just disappointed that Netflix is looking like a bear flag, and it's still got that descending wedge shape, but it's not looking too healthy there for the bulls. Let's see if we can see some insight on that. Yes, that's what I'm looking for. Finally. Get some momentum on that put side. Oh, wow, look at that. Nice bar. Close that. Yes! Yep. Right. Bam. quick little. Right, if we don't print a doji here, we should be going right to first target, 385.50. Second target. At this point, I'm not trading SPY today. I'm just going to wait for this range to shake out and probably play the volatility on the MES, just either immediately after the meeting starts or whatever I can find. It would be prudent to have legged into a strangle with this mess here, but that time decay on SPY, man, it eats a strangle pretty quick when it's sideways like this. So, gosh, a condor would have been so much better, because a condor you can run on this pretty easily, and that's where you just run one call debit spread and one put debit spread based on the price action you get here. To do a strangle on SPY, so right. So wheel trading is going to depend on three key factors if you're going to start with a penny stock that you can utilize in a small account. One, it's got to have options liquidity with weekly options. So you got to have, at least every Friday expiration. And it's got to have volume, at least in the hundreds on contracts traded daily, ideally. Sometimes you won't get that. Sometimes you get 40 or 50 contracts. In a small account, if you're doing one at a time, that's okay. But you got to be keen on that bid-ask spread. Some penny stocks, even though they have weeklies, there's a 5 penny wide spread on the bid ask, so they only trade in nickels. No good for a wheel trade, especially on a small account, because that's going to be 4 pennies worth of slippage in every position you enter. So ideally you got to have that 1 to 2 penny bid ask spread, and that allows you to get in at whole dollars for your contract values. The idea behind it is also going to be very dependent on having options contracts both above and below the current trending price. So if it's a stock trading at about $1, you've got to have 50-cent puts available, and you've got to have $1.50 calls available. And usually it's easy to have calls available on the top side of price if it's a penny stock, but below it's got to have those 50 cents if it's at $1, or if it's a $2 stock, you can have some legs below there. But ideally, you've got to have room to go in either direction. And if it was something like CEI, that's the price is below that 50-cent put. So the price also has to be above that 50% level. Like I said, you got to have options on either side of price to be able to do this. So, yeah. If you would have to have, let's see here. So currently, you'd have to have. Well, you'd have to have $13.50 for one side of it, so you'd need twice that to enter a wheel trade. Right. But it would be ideal. I mean, you can run that in a $3,000 account and still have some wicked profit in that situation. $100 account, not so much. But you can run strangles in like a $50 and $100 account, and then build that working capital using strangles. That's not a problem. Yep, totally fine. And I'm going to sign off on the YouTube side of things, and we'll keep it going in our Discord channel here. I'm going to see if I can fix some of those audio issues before I go and broadcast in the middle of the day, so I can make sure that we can hear both sides of the conversation for, getting the full effect excitement on our YouTube channel is what we want to go for. So I'll see you guys later on today. Hopefully I'll get those issues fixed, and we can get rocking and rolling. I'll see you guys later.